Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we are going to look at the charts with Chris Vermeulen of the Technical Traders. How you doing today, Chris?
I'm good, Darrell. How are you?
Chris, I'm doing really well. The gold price has been moving. I've been kind of conflicted in terms of, being a person that looks at the technical charts, and some people say that, oh, well, the technicals don't even matter. It's all about the fundamentals. And then, sometimes I do look at the fundamentals a lot more in terms of what's driving gold and the price of gold or whatnot measured in dollars. And so I was looking at the charts, and the RSI seems to be pretty hot right now. And so I wanted to get your perspective on the charts of gold right now.
Sure. Yeah. Well, you bring up a really good point. Either, there's a few different camps on how people look at assets, right? They can look at the fundamental side. They can look at the price side. They can use a combination of both. What I do is really I focus on the technicals, and the technicals usually lead with the fundamentals. But if you pair the two together in the right environment, that's when you get these super strong moves, which we are seeing in precious metals. When the technicals are strong and the fundamentals, you get those supercharged moves. So let's take a look at the gold chart here. If I show you the daily chart of gold, you'll be able to see here. We've got the bottom blue line here on the RSI. If we take a look at gold, it's around 74, 75. I trade RSI, like I always look at RSI very differently than I think most people. I'm not sure how you're looking at it, but most people always say, hey, when the RSI is above, 70 or 80, the market is overdone. It's about to top out, and you need to be aware. But the way that I've always learned how to read RSI, and if you go back in time and you start to look at it, you'll realize the strongest rallies happen when RSI is more so above 70. And the biggest sell-offs happen when it's below 30. Those are the power zones. You want it like over that 70, like flexing its muscle, like that. The line bouncing above 70 is the actual muscle, the strength. It has strong relative strength, and that's what you want. Most investment strategies, if you go back in time, that outperform are focusing on which stocks have momentum and have a high relative strength. Relative strength means how strong is it compared to itself in the past, this particular indicator, or relative strength in comparison to other commodities and asset classes. And you want things with high relative strength. Most people think it's an overbought indicator, but it's actually a sign of strength when it's over 70, not overbought. So that when we look at it, you can see here, as soon as we crossed the 70 line, which is right here on the chart, we've seen nothing but some of the strongest rally in gold that we've seen in a long time. We saw the same back over here in 2025. It broke out and we had a very strong rally pushing higher. So this is a really good sign. This is what we want to see. And it can stay up here for an extended period of time. So when you look at RSI, everybody looks at indicators differently. But if you go back and you figure out where the biggest moves happen, RSI, you want a strong RSI if you own something, which is completely opposite of how most people trade it. They usually get nervous when the RSI is high, but you should actually be excited and you want it to stay high. In fact, you want it to keep going higher because it's telling it has more and more strength.
Yeah. Would you say that the also what matters is the speed at which the RSI has risen? So like when we look at when we think about some of the meme stocks or cryptos or whatnot, you look at those RSI charts, they're just like vertical. Versus like when you look at the RSI here on gold, it's been a steady performer for the whole last 30 days, the last month and a half or whatnot. So do you think that the speed at which the RSI increases, obviously if it were to go from one day go up above 85, that would look a lot different. It's like, okay, you might want to take your profits here. This is like way too frothy. But gold seems to be like a steady mover on the RSI right there.
Yeah, and I believe that's kind of what you want, right? If you look at the RSI indicator, something that's, if the RSI spikes up, that means price has spiked. And as you know, if something goes straight up, usually it gives back at least half of that move. If there's a very strong parabolic move up, it usually is going to want to pull back. So I like gold. I like something that just holds above 70. I don't care how high it goes, or if it's just like lingering around 70. It's a sweet spot. You just want the RSI above it. Ideally, you don't want a big surge in price. You want a steady grind. And the RSI trading sideways on gold, nice and consistently, is the same with gold running up and to the right on a nice consistent pace. It's manageable. It can do this for a long time. So that's what you want. You generally don't want anything really to spike unless you're in it for a quick trade and you get in and you get out. Other than that, you generally want a slow, steady growth rate, and that's sustainable versus a spike.
Yeah, definitely. So last time you came on the show in August, I think gold was, I forgot what what price gold was that measured in dollars. I think it may have been at 3,400, 3,300 or something of that nature. And you put the Fibonacci on, and you had a $4,100 target. And just thinking back on that target that you had, it looks like we're definitely headed towards that direction. I mean, especially being at over 3,900 on the futures. And so could you speak to that? Just even that call and whatnot, and what do you see in the future for gold, the price of gold? Yeah,
when we take a look at these moves in the market, we had the rally up, we had the big consolidation. If we carry that over to where that price is, there's we're getting to this 4,100 level here, 4,160, 4,180. It really depends on which bars we pick from, but overall we're looking for 4,100. Typically, when gold rallies or when an asset rallies and it hits the 618 level, this is known as the golden ratio, the 618. If it pauses there, generally we go up and we hit the 100% measured move, the one level afterwards. And of course, we have done that. If we drop down to the daily chart and we look at the orange line here, which is the 618, you can see gold has kind of stuttered and kind of got a little stuck there. That is a good thing. That's just telling us the momentum waves going through the market are accurate. You want price to run into a little bit of resistance at the 618, and that means everything is lining up. And once those sellers, whoever was going to naturally get out at that price level when they hit a satisfaction level, once they're done, we're going to see the market rally to the next resistance level, which is about 4,100. So I think we're well on our way. I think potentially we're going to be there in a week or so. So I like gold. I mean, we're long gold. We played this breakout with an extra gold trade to take advantage of this move because this is just gold is in that sweet spot. The whole precious metal space is. The fundamentals are behind it. We've got global chaos, and of course, I think we're also in a late stage of the stock market, which is where precious metals start to come to favor naturally. So all kinds of things are together. In fact, if we look at even the seasonality chart you and I might have touched on before, really from August where you and I talked and we got the breakout in gold all the way till pretty much, where we are now is the sweet spot for gold. Naturally, gold wants to run up into kind of early October. And then from there, it might take a bit of a pause or a breather. So we've definitely had a tailwind. Everything is in favor. And I think gold still wants to push up higher. And it's a nice trade to be in right now.
Yeah, for sure. Yeah, I totally agree. So right now, looking at, some of the perspective is that, okay, gold's getting a little frothy. Some of the folks I've talked to, they're taking some of the profits off the table and such. And so what are you looking at? What are you doing? Like, when do you think you're going to be taking profits? Is it like when it hits that Fibonacci target, that 4,100, or how are you positioning?
Yeah, you bring up some really good points. So, for example, this particular trade, this extra bonus trade we've done in gold, we took some of our profits at the 618 level. So around 3,700, we took some off. I plan to take the rest of this particular trade off when we get to about 40.75 or 4,100. And again, that's just a simple ETF trade just to get more exposure to this space. I own a lot of physical gold, which I am planning on lightening the load at some point. But I do feel like we're going to see gold, silver really spike up and potentially blast through this 4,100 level. So from a trading standpoint, 4,100 is more or less my next target to trim off the rest of a short-term trade. As a long-term investor of gold, I do think we might see a blow-off phase to the upside. And if we do get a big vertical blow-off in gold and silver, I may actually trim some physical metals as well. But got to wait to see if and how that unfolds if I'm going to do that. But you were mentioning some people were taking some profits. If we look at the 10-minute chart here on gold and just zoom back about 3 trading sessions, you can see on this 10-minute chart down below, a couple days ago, we had a big bout of selling in gold. And then just 2 days later, we saw another big bout of selling with high volume. So there's no doubt we are starting to see some big institutions or some big individual investors starting to unload some gold, profit taking in their portfolio, as you just mentioned, Darrell. So this doesn't mean gold's putting in a top yet. It just means we're getting to the point where some big savvy investors are also locking in some gains. They're managing the risk. They're focusing on protecting capital. So this is just an early warning sign that we're in a volatile market condition for gold. Right now, I believe we're entering a very volatile space where there is fear of losing money or fear of giving gains back. So we have people locking in gains like this. And then we also have fear of missing out. So every time gold pushes to a new high, it's triggering people to be like, I can't take it anymore. I have to get in. Everybody's making money in this space but me. And so we're going to have waves of profit taking, of selling. We're going to have waves of people buying, piling in. So just expect a volatile ride. I mean, this is the part a lot of people have been waiting for. We got this big rally in gold, silver, and miners, and it's fun. We need to enjoy it, but we also need to know eventually it will have some type of correction. And the question is, are you mentally prepared? Are your positions prepared? Like, do you have a strategy to lock in gains? Or are you just going to mentally ride it out and anticipate this time is different and hope and pray it doesn't have a bigger correction than what you're comfortable for? So it's kind of where I'm at mentally. Short-term trade, I'm not too far percentage-wise from closing out. Long-term investor, I'm looking for some type of massive blow-off phase where I might actually liquidate some physical metals as well.
Okay, got it. Yeah, thank you for those insights there. So could we look at silver? I mean, silver has been ripping, and so I want to get your perspective there. What are you seeing there?
Yeah, silver's pretty much doing the same thing. It's on fire. It's taking off. I mean, the monthly chart, silver has blown past my Fibonacci targets, so it is kind of going into, if you go back to 2010, 2011, we're going into like parabolic price action here. I do think silver is going to break to all-time highs. I think we're going to see have a big blow-off and spike higher. In fact, I was just chatting with another trader. Potentially, silver could spike up to about $84, $85 over the next 4 to 6 weeks potentially. And that would mean gold probably goes to 4,500, potentially even higher. So it just depends if we kick into this real serious feeding frenzy and parabolic move, which you can almost cut the air with a knife of how much FOMO there is and how much people are in love with their precious metals and uranium positions and all of that stuff. Because everybody's accounts should be hitting all-time highs. If it's not, you don't have a very good strategy in play. And so when times are really good like now and everything is popping and running, we do need to know that after good times comes quiet times or tough times, right? So it comes down to understanding we're in this exciting, fun phase where we all feel like heroes and we know what we're doing. The question is, when the music stops, do we know how to remain heroes and maintain or retain our capital, protect it, or potentially grow it when things go sideways or downward? So right now, it's just a feeding frenzy, and you got to be part of the precious metal space and just enjoy the ride. But make sure you've got a strategy to identify, hey, is this price reversing? Because when you look here at 2011, man, it rallied significantly, and 1 month later, it gave back that whole parabolic move, and then it took a long time to recover. So that's what I'm worried about, is we have a big spike straight up. That is going to be the FOMO spike. And then, of course, everybody who's bought in that big green spike ends up paying a premium, and they might not see new highs for a very long time after that. Yeah.
I remember back in July, I was surprised to see, I think silver had broke 37, 38. somewhere around there, $39. And I mean, we're pretty much about $10 above that right now.
Yeah, it's amazing. Yeah, no, this is this is what most precious metal people have been waiting for, is this rally. And for silver to hit all-time highs, we're really striking distance, a session or two away. It could do that. So, and silver's had much of the same. If we look at silver, this past session, there was a big bout, heavy volume selling in silver as well. So again, it's not just gold, people are trimming profits, it's silver as well. And, it's just a sign that there are some savvy investors protecting their capital. They're not swinging for the fences. They're actually like locking in gains on the way up, which is what I do. It's not about how much can I make. I need to make the most out of this move. I want to catch a good chunk of this move. I also want to protect myself. I don't mind making a lot less than what the asset actually moved, but I don't have to worry about giving it back and all of that later, simply because I was, reaching for the stars.
Yeah, especially don't want to be holding a bag either, right?
No, and then most people do, right? But nobody. This is the phase we're getting into now, where everything is working. Everybody feels like a hero, and there's a problem. And I've worked with traders since 2001. Is they don't want to get out of a winning trade because it's working. Why get out of something winning? And they believe in it and they like it, especially if they love it, like precious metals or something that they're really in love with, right? And then, of course, when it rolls over or they get into a trade and it sells off and it goes against them, they don't want to get out of it because, well, I don't want to take the loss. I'll just wait for it to come back. And as we all know, if you do that with some stocks, some of those stocks never come back. They eventually get delisted. They turn into marijuana stocks. They turn into an AI company. Who knows? These stocks become worthless and they pivot and all that stuff. So we're in this phase right now where people winning don't want to sell. And number two, even if it rolls over, they still don't want to sell. So this is what happens. This is why we get these big bubbles. And your price just surges until eventually it sells off enough that it hits a tipping point where people bail out. But usually they need to lose, a huge chunk percentage-wise before that happens. A big financial reset. So
the copper market, of course, is the biggest metal market on the planet. 200 to 300 billion globally of metal traded. Following majors around and picking up projects that they jettison can lead to great success in this business. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. If you want to learn more, you can find us at vizslacopper.com.
Can we look at platinum? Platinum has ripped significantly higher. I think it's outperformed gold and potentially silver. So can we look at platinum?
Mm-hmm. Yeah, platinum's, this is the monthly chart of platinum. So we can see it's really popping back. It's getting back into what we saw 2011, 2012. I'll just drop to the daily chart so we can kind of see this price action here. It really broke out of this. It had this long base and it just took forever. It took years. It finally broke out of it, had to pull back, and now it's exploding higher. And, right now it's breaking out again. I was actually talking about this earlier in the day. This is primed and ready to see another big push higher any session here for platinum. It's a high momentum move. If we just look at this move, just based on the most recent price action, it's pointing to platinum hitting roughly 1823. So it's got a pretty good pop potential here over the next, this is a daily chart, right? So over the next week or so, we could see it hit this level. But if you go back, Darrell, to 2007, you compare what happened to the stock market when it hit, when it was hitting all-time highs and how gold was outperforming. And then if you look at what these other metals like platinum, palladium, and miners were doing, platinum, palladium, and miners all came into action in like the last month and a half and started to just take off. Just before we saw the whole precious metal space go into a decade-long pullback. So we're just seeing that now. We're seeing platinum, palladium, and miners go parabolic. They're all taking off. They're like the leverage plays. People think, oh, gold's moved too far. I want to move into something else. So they get into platinum and palladium and miners. And that's a kind of a warning that it's becoming a little bit of a crowded trade. For whoever is going to get into it, a huge chunk of those people are getting in right now. So it's interesting because we're in this exciting phase where we're going to see some of the biggest percentage moves continue to happen to the upside until it reverses. And so these metals are kind of that warning. And when we look at like gold miners, for example, if we look at like GDX and we look at it from a monthly standpoint, we are right back up to the highs, or at all-time highs for GDX. We blew past the 2011, 2012 peak. You can see the last two bars are going parabolic. And it's pretty much the same with silver miners. Silver miners are actually they look even more parabolic to the upside. And as we know, things that usually go straight up are usually going to come straight back down for generally half of the move. So the question is, where is the top? When is the top? And then from there, we can gauge, how much that could unwind when the time comes. But right now, obviously, look at the volume piling in to the gold miners and these silver miners here, SILJ. Everybody's chasing it higher. And I know a lot of people that have a ton of physical metals. They have a ton of miners, and they're still saying, I wish I had more. And that to me is like, that's the greed phase. That's like we're in bubble parrots. Like they're winning and they're doing well and they want more. I'm like, oh, this is signature. People are going to get burned.
Definitely. I've definitely been guilty of saying that for sure.
Yeah, we all.
Yeah. So when we look at, can we look at copper? You have copper chart. I know copper is more of a, economic indicator as well as, it's driven by economic activity. And so we had obviously the news about the tariffs back in July, and then those walked back. There was a big sell-off, and then just want to see what it's been doing since then.
Yeah, so copper gets up to this upper resistance line I just drew here, and it tends to naturally, whenever it hits this upper line, it tends to be overbought, and it usually has a correction. We had the tariff news, as you just mentioned, Darrell. We had a huge pop. It held its ground for about a month, and then, of course, it just unwound and collapsed again. Now we're working our way back up to this line here, which is really just a massive resistance level. So in the grand scheme of things, copper's coming to life. Pretty much everything metal related and all the different mining stocks, our money's just piling into them. And so you definitely don't want to step in front of the steamroller. You can't stop it, right? You just have to let it roll and go up until that momentum stalls and reverses. And we can see that with a lot of different stocks as well. Like look at XME. This is base metal miners. And there are some precious metals in here. They're in the mining space. They're going higher. If we look at COPEX, which are the copper miners, they're having a nice run as well. So it's just anything to do with metal, period, is on fire right now. If it says metals or miners in the title, everybody's just buying into it. So, and you can see the volume is definitely taking off on all of these things, meaning it's becoming a mass psychology play. People are chasing it, and the market is thriving up here.
Just looking at so where we are in this particular cycle. So I've been mentioning this on multiple interviews, and I think it's important to mention because we have been seeing more bigger hedge funds, wealth management companies and such talk about having an allocation to gold. Mm-hmm. We had Morgan Stanley, chief investment officer. He came out and said 20% gold. We had BlackRock come out and say, have an allocation of gold, especially with rate cuts. Goldman Sachs had a $4,000 target on gold. And some of these other big banks are now, putting these higher price targets on gold. And so, I'm kind of wondering, okay, are we still at the beginning of is this going to move higher now that we have these big wealth managers starting to advocate for it and such? And so that's kind of what I've been trying to factor in, or have they already moved into it? Because sometimes, like even when we look at like even the when the Bitcoin ETFs were launched, they had a big sell-off, and it took some time for these big funds to actually start getting investors' capital invested into those ETFs. And so now that they are, talking about allocation of gold, kind of wondering if it's going to take more time for some of the average investors to start having some of their portfolio allocated to gold, and if that if that's going to actually move some of these prices of the metals higher.
Yeah, it's always tough to gauge how much of the market has gotten in. I know, like the average portfolio really probably has like a fraction of a percent, right? Most people don't carry precious metals. Really, us in this space obviously love it, have a heavy weighting to it, but most people in general have very, very, very little amount of precious metals in their portfolio. I mean, typically when everybody starts talking about something and they put all these big targets where they ignored it forever, and now finally it's one of the top performing assets, and now they're all saying you need to hold it. It's like, it's kind of, to me, it's a bit of a warning sign that it's becoming the crowded play. They're really saying it because, it makes them look good. They're getting into it because it's taken off, and they really just follow their herd. If they don't do what investors are doing and other investors are doing that's making money, they look like they're left behind. So you always see like advisors generally late on the train, and you see all that. But you bring up a good point. If all the big investors or the big advisors are now saying get precious metals, is that going to spark a whole new big wave of money rolling into gold and bring in fresh blood? It probably is. That's probably one of the reasons why we're seeing things go up now. It really doesn't matter. The last few days, it's just gold just keeps grinding higher. You can pretty much see and feel the inflows. There's nothing really stopping it right now. It might slow down a bit, but overall it just keeps pushing higher. So, and that's why you don't want to try and pick a top in this. You can pick targets. I like to pick targets of where we should see things run out of steam, take a pause and a breather, which gold has been doing for the last several years. It just keeps hitting one target after another, lets us analyze and draw the next set of targets. And right now, 4,100 is the next target. And then from there, we'll have to recalibrate and say, okay, well, where should it go next? And for all we know, maybe gold is going to go extreme parabolic, kind of like we saw in the 80s here, where or the late 70s, where it shot up and it rallied like 700%. So there's potential it could go a whole lot higher.
Mm-hmm. Yeah, for sure. Yeah, thanks for sharing that. So could we look at the uranium chart? That's one chart that I was kind of wondering about. We had a big sell-off, and then starting to have some more life.
Yeah. So I think there's a couple of interesting things in uranium. And so this is the URA ETF for kind of uranium stocks. There's a few different ones. I think there's a junior one, but it doesn't go back as far as this. But what I find interesting right now is uranium stocks sold off. If you looked at the spot price of uranium actually put a bottom in right over here. Well, uranium stocks didn't bottom for 4 more years till 2020, the 2020 sell-off. And so there was a lot of pain with people who were holding uranium stocks. They just kept going down and down and down. Even though uranium put in a 300% rally between 2016 and 2020 before the uranium stocks started to bottom, uranium people didn't want involved in it. They got burned on every one of these bounces thinking it was the bottom, and it wasn't. And then they give up on it, even though uranium had bottomed years and years ago already. And now we're at a phase where uranium really actually the spot price has peaked, and it has sold off in a pretty big way. And now what we're seeing is everyone piling into uranium stocks, even though spot price has gone dramatically down. Now, I don't know the space. I know there's a huge chunk. Most people are following uranium for fundamental reasons, supply and demand reasons. But from a price standpoint, this divergence here, where spot price put in a bottom, but gold miners kept falling because they gave up on it. Well, now I feel as though the spot price may have actually peaked, and it has put in a significant top, and it's just starting to trade sideways here. Yet investors are saying, no, I like this space. I believe it's going to go higher. And so they're moving in expecting spot uranium pricing to go dramatically higher. So I almost feel like there's a bit of a lag. I feel like uranium stocks are still in an uptrend, but it's actually the greed play now. Over here, people didn't want them because they just gave up on them, and they're hated. Now they're loved, and people want it to go higher, even though we might be seeing it put in a massive, a major top, or in terms of uranium spot pricing. If we take a look kind of at these 4 stages of the market that you and I have touched on before, Darrell, this blow-off phase this euphoric phase where everybody, their accounts are making tons of money. Well, uranium has kind of done this, and it's pulled back, and now it's starting to put in this sideways move. And this phase here is called the complacency phase. So if we look down here at the emotions of the market, this complacency phase is where investors think that pullback in that asset is just a pullback. And so they keep buying those stocks, which is why uranium stocks might be going higher, but they don't realize it actually peaked. They're just going for, they're expecting it to go higher. They don't realize price has actually peaked. So that's the big question with uranium. Is it about to break a lot of people's dreams and, go into more of a correction? And it's really just a crowded play right now. People want to get into it because it is headline news everywhere. And pretty much everybody seems to own uranium and precious metals, both of those. So again, there's signs here that we need to be aware of. These are typical market, like signature emotional moves that are happening in people's mindsets and their actions of what they're buying. So we just have to let everything unfold. That's what makes this so exciting. We're in a raging bull market, which is exciting, but there's also divergence starting to happen. And so it's good to be like mentally prepared that, hey, this party isn't going to last forever. It's eventually going to come to an end, and we're going to have to deal with it, manage positions, close out positions, lock in gains, and then recalibrate from there.
Yeah, so some reason I keep thinking of the game musical chairs. Like it's at some point the music's gonna stop, right? And you could be left holding the bag, right?
And this is one of the things with uranium and precious metals is they can go dormant for a decade, or they can be losing you money forever, right? And then when they start to work, it's so short-lived. People are like, well, I don't want to get out. I just held it for 15 bloody years. I want to ride this thing for longer. And that's part of the problem is these cycles are so long when they go out of favor that when we're in the strong cycle, they're like, well, they feel like it's always just started and there's a lot more to go. But it's not always the case. And trading, investing is a psychology game. That's why I try to stick with the charts, stick with the money flows, divergences, all this stuff to give me guidelines to manage positions and manage my emotions so I don't just buy in and hold on to it because the fundamentals are good. I know how fundamentals work. You can buy something with the best fundamentals and you can still lose your shirt. I've done it over and over and over again, which is why I just focus on price. And price is the ultimate indicator of trend. It's the only way we make money as investors because we need price to be moving in our favor, no matter what the fundamentals are. So if you just follow price, you'll be on side with the fundamentals when they line up, just like in precious metals. It's been in a bull market for a long time. Finally, the fundamentals in the perfect storm scenario has hit for precious metals, and you already own it because the technicals told us years ago to get back in, and then finally the fundamentals caught up in a big way.
Yeah, definitely. So what are some of the other things that you're paying attention to? We've also obviously had, news with the Fed rate cuts and such, job losses, all of that stuff that's happening in the economy. And so just want to see what else you're paying attention to on the charts.
Yeah, I think an interesting thing to look at is if we look at the overall markets, we'll look at the QQQ. This color-coded chart here is based on technical analysis. It's also based on cycles. It's based on market sentiment of market participants, of money flows. And what's interesting is this previous high we saw in the stock market, it had rallied up, we had green bars, and then we got this climb in pricing with really weak underlying technicals and sentiment. And what we have right now with the stock market rally is a very similar situation, again, where the market is rallying, but if you lift the hood to the market to take a look at the engine, it's not very strong. And that's what these red and orange bars are telling us. They're saying, hey, the market's trending up, but just be aware, it could reverse and start to sell off fairly sharply. So if we go back here, Darrell, and look at the 2007 stock market peak here. So the candlestick chart in the background is the S&P 500 hitting all-time highs just before the 55% crash in the financial reset. Gold was also rallying up together, telling us that something is wrong. Big money's flowing into gold. Gold took the lead in terms of performance. Well, if we look on the right-hand side to where we are today, we have the S&P 500 pushing up at all-time highs. We've got gold outperforming and running higher, telling us that something big globally is about to happen, something bad. And so people are moving for protection and getting physical assets. And what's interesting here is if we look at the chart of the dollar in 2007, the dollar fell. It was out of favor. It was one of the most hated currencies. Everybody was saying the dollar was collapsing. Gold's going to the moon. This time is different. Well, if we look at where we are today, it's a very similar situation. We've got the dollar down. It's one of the most hated. Everybody's saying it's going to collapse. This time is different. And reality check, every time is different. But price action does the same thing. It either goes up because they're bullish, people are bullish, or it goes down because they're fearful. And this whole market scenario right now is the fundamentals are different. They're different every cycle. And usually when gold's outperforming and the dollar is down, we're usually going through some huge change. It never ends up being the end of the world. It's just cans get kicked down the road, things recycle. And so people right now are super bullish in metals. They're bearish on the dollar. We're about to see, I think, the stock market do what it did in 2007, which is eventually it's going to start to sell off. And eventually we're going to go into one of these huge 50% corrections. Gold, while it starts to sell off, I think we're going to see gold and silver have one final big push higher, as you and I already touched on. But eventually the yellow line here, gold will pull back with the stock market just because of mass liquidation, margin calls, fear. When people get nervous and they're losing money in most of their assets, they usually liquidate everything, including gold. That's why we see gold and everything sell off. And when the world kind of falls apart, the US dollar in the past has put in substantial rallies and taken off as a defensive play. And I don't know why 100% that is, but I would think it's because the United States is a powerhouse. They control or try to control and rule the world more or less. They got the military, the sophistication to do a lot of that. And so I think that might be why the dollar strengthens. The Western economy bounces back so fast. It's very powerful. And so this is like the scenario that I think we're coming into is a big correction in the stock market. And right now we're in this final exciting, fun phase of small caps and micro caps, precious metal space. All those things are taking off right now. So,
yeah. Well, I think you had told me about the ticker symbol. I think it was UUP, or it's like a dollar.
UUP is an ETN. I think it's a type of fund that mimics the U.S. dollar. So you can play this. If the dollar, if you get out of stocks, if it starts to fall, you can move into the dollar, which we did actually in 2022. If we go and look at 2022, the stock market fell 22%. And the U.S. dollar rallied like 17%. And I really like the U.S. dollar because even a big pullback within this rally is like percentage-wise, it's really small. I mean, you see like the stock market pull back 3-5% very quickly. Well, a huge multi-week sell-off in a currency is like 3 or 4% in most cases. So it's very controlled, and you get everything's falling apart. You just move to a currency that currencies can trend very nicely.
Mm-hmm. Got it. And then could we wrap up with oil?
Sure.
Yeah, oil's been volatile.
Yeah, so oil, pretty clearly it's in a downtrend, a series of lower highs, lower lows. That's the definition of a downtrend. I do think it broke down just last week here, broke down below this 61.50 area. So now it's breaking down. I think we're going to see it down around 56, 58. And then we got to see if it's going to hold that level. I think we could see it eventually break those lows. If we do go into a recession, if things start to stall out here, I think we're going to see oil back down in the mid-20s or 40s. As we know, it can go negative. So any value is possible, but based on this chart, I think we're going to see it get beat up pretty well. And if we get rid of that negative spike, we just come back down to kind of historical price action here. Let's see how far this loads. I think we can come back into this range. If I draw a line right across here, this $42 area is somewhere in this $42 area is a very significant point where it's been resistance and then support, found major support. We've had a lot of price points tagging through here. And so, of course, if the economy weakens and everything comes to a grinding halt, we could see oil go into a landslide and sell off and go back down to this level. It's amazing how many people say there's no way it's going to go that low. But as you can see in history, it's been this low many, many times. This is actually a normal low, really. It's just people don't think it should be. But when you look at the big picture, you really do get a view of the overall price action of the market. And most people get zoomed in way too much to the intraday charts and the daily chart. Even the weekly chart doesn't give you enough to look at. You really have to zoom back like 15, 20 years just to get a feel of where the upper and lower ranges are for a particular kind of commodity or asset that you're looking at. And so I think oil's going to go for a big haircut here eventually, and we're going to get that financial reset, and it'll be very good for precious metals.
Got it. Well, shoot, thank you for highlighting that for us today, Chris. Where can people connect with you, connect with some of your services, some of the trades you're putting on, and all of those things?
Sure, yeah. The best spot is go to my YouTube channel, The Technical Traders. I share morning videos, sometimes evening videos there of recapping on stuff moving in the day. Also, The Golden Oil Guy. You can go to thegoldenoilguy.com, which I share trades on gold and oil and uranium and Bitcoin there as well. So that's it.
Yeah. Well, you all have the information. Be sure to hit the subscribe button. Love to have your support. Also, click the link in the description below or the pinned comments to the Vancouver Resource Investment Conference. Love to have you there in person, as we will be there and we can connect and everything. So love your support. Thank you all for watching. And Chris, until next time.
Thanks, Darrell. Take care.